Hi everyone, it's been a while since I've done one of these videos, but I thought with it being the budget on Wednesday, I thought I'd give everybody an update on how we see things, what it might mean for you as a business or as an individual. Hopefully there was something of use to everybody. But yeah, the company in this video, you'll see there's an attachment with our kind of budget update summary, so all the details in there. If you want to, I'd recommend everybody have a look through that. There's a lot of numbers, as you might expect, but hopefully it'll clear up a few things for everybody. But just to kind of summarise the budget, it was somewhat surprising. I was expecting more tax increases in the near future, but it looks as though they're kind of trying to support the economy for the next 2 years, but then we're all going to have to pay it back, obviously. So sort of ongoing COVID support that everybody's getting. Furlough's been extended. It's going to run as it is, 80% of wages up to the end of June, which is good news. Then they're actually going to extend. The extension runs to the end of September. But for the month of July, the government will pay 70% and the employer has to contribute 10% to the employee's wages. And then for August and September, the government will pay 60% and the employer has to pay 20%. I think the employer pays employer's national insurance as well. So furlough's been extended, slightly reduced for the kind of last 3 months, but it is going to run to September. Those of you who are self-employed, the self-employed income support grant is still coming. There's going to be a fourth grant for the period covering, I think, February, March, April, which if you're still being affected by not being able to work as you had been in previous years, then you'll be entitled to that. And then there's actually going to be a fifth grant covering the period May to September. That grant, again, these grants are all at the kind of 2.5k cap. If you're up to earnings of 30,000, you're used to the calculation now, I'm sure. But if your turnover if your turnover's not dropped by 30%, I believe it is, then there's kind of sliding scale to reduce the amount of the fifth grant. But again, I'd be very careful, as I've mentioned in previous videos. I have seen a couple of checks now on people's self-employed income support grant where HMRC have asked for copies of invoices to prove that you were trading in prior periods, bank statements for certain periods. So I think they are doing some kind of cursory checks just to see that businesses have been affected. So that self-employed income support is there and is going to cover everybody up to September. But just be careful, make sure that your business has genuinely been affected. Other good news was the kind of 5% VAT rate for anybody in the tourism, retail, hospitality, leisure industries. Those who are directly affected by closures, etc. There's a 5% VAT rate, which is going to run. It's been extended, so it's going to run for 6 more months. So the 5% VAT rate applies to September. And then there's a 12.5% sort of interim rate that goes from September to March next year. So if you're in one of those kind of, as I say, retail, hospitality, leisure tourism, then there's reduced VAT rates applicable. Those of you who, if you remember last year, there was the option to defer the VAT payment, the kind of March 20 to June 20 VAT payment. Businesses were allowed to defer that up to March 21. So that's coming around now. So if you're one of those businesses that did defer that VAT payment, they're obviously aware that a lot of people aren't going to have the money there. So your options are you can still pay it in full, March 21, as with the original kind of plan when that was put in place next year. Or you can sign up for a monthly payment plan to pay that off over 2 to 12 months, I believe it is. So you can go online and set up an online payment plan using the gov.uk website. I'll put a link in the video description, and there's also a phone number to call as well, so you can do that if you need to. We're getting a lot of calls or emails about what grants might people be entitled to, and it's difficult for us to advise that there are grants available for businesses that had been forced to close, your hairdressers, retail, etc. But nearly all the grants are now administered by the local council, because there are also discretionary grants as well. So you might be somebody who you're not you're not a hairdresser, but you supply into the hair industry or whatever it might be. So if you contact, there are dedicated sections on all the local council websites now as to what grants are available. So if anybody's wondering about a grant, then it might be worth just checking out the local council website. Other things that you might want to think about claiming for, the HMRC have, as you might imagine, they relaxed the kind of rules on what employees can claim for purchasing items from home. So anything that employees have purchased to use equipment-wise at home, that's perfectly okay to reimburse them. Also, something that I've had a conversation a few times, that employees, because if people have been working from home, then they're allowed to be paid up to £6 a week tax-free. So that includes directors as well. So when we do accounts for our limited company clients, we do automatically put a deduction in those accounts, which we credit the loan account with. So don't worry, if we just take care of accounts and we put that Homes Office claim through, then we will be. But if you want to maybe give a little bit back for employees who've been working from home, or even they want to contact HMRC and update their tax code, it's sort of, for the sake of £300, it might save somebody 60 quid or 120 quid or whatever it might be, depending on the tax circumstances. Then that's a little thing that gives a little back that you might want to think about. One of the other good points that I noticed from the budget was what they're trying to do is trying to encourage people to invest in the businesses now and pay tax back later, essentially. So they've announced this. If you maybe heard before, when you invest in plant and equipment, so it could be computer equipment, machinery, fixtures and fittings, whatever it be, those kind of large capital items. When you buy that kind of stuff for a business, we write it off over several years in your accounts, but you get full tax relief in the year that you purchase. So if you imagine, very simple calculation, you buy a piece of equipment for £10,000. We might write that off in your accounts over, £2,000 a year over 5 years, for example. But you get even if it's on finance, the £10,000, you get that knocked off your profit year one. What they've done is they've enhanced that allowance, that capital allowance. So they'll actually give you 130% relief. So that £10,000, you'll actually get £13,000 knocked off your bottom line. So that's starting from April, and they're going to run that for 2 years. Okay. So the point that being is that if you are thinking about if anybody out there is thinking of buying some equipment right now and literally going to write the check, you might want to wait till April and take advantage of that additional relief. It also might help your planning over the next kind of years. If you're thinking of investing in any capital equipment for the business, as a computer equipment, IT equipment, plant, then there's enhanced allowances available for you, which you might want to take advantage of. Other bonus points, other positives that we can take from the budget, the stamp duty land tax on property purchases, it's 500,000, no stamp duty. That's actually been extended to June, so we've got another 3 months with no stamp duty on any property under 500k. And then they're actually keeping it at 250k for another 3 months to September. Then it'll go back to the usual 125,000 rate. So anybody who's thinking of moving house or buying property, if the next 3 months, that'll have an impact on property prices, of course, but you've got 3 months to kind of take advantage of the 500k rate, and then another 3 at 250. The other positives, I was actually expecting to see in the budget an increase in capital gains tax rates. Because capital gains tax rates are relatively low. You can pay 10 or 20% on shares. You can pay 20 or 28% on property. And they've not increased capital gains tax rates or income tax rates. So again, I think what they're trying to do is encourage individuals to get their finances back in order. They don't want to take, as soon as we're coming back out of recession, hopefully, then they're not going to try and take it all immediately from individuals. So again, those of you who are thinking about maybe some capital disposals, I think total conjecture on my part, but I think capital gains rates are prime for a way for the government to get tax back from taxpayers, and they've not increased them. So I think that just as a very, very loose planning point, you might want to think about this year to come, rather than making a disposal in 2022 or whenever it might be and paying a high rate. Who knows? As I say, nobody knows what the future holds. So yeah, I think that's so. All in all, there's quite a lot of positive news in encouraging people, encouraging the economy, encouraging business. As an extension of furlough, extension of the income support grants. There's still grants available. Reduced VAT rates, increased capital allowances. There's no income tax raises, no capital gains tax raises. So all positive. But there's the elephant in the room, so to speak, is that there's going to be a significant rise in corporation tax rates from April 23 for those of you who are limited companies. If your taxable profits are under 50,000, you won't be affected. That tax rate will stay at 19%, but profits over 250 will be taxed at 25%, and there'll be a sliding scale in between those points. So a lot of our client base are limited companies, and a lot of them have got profits in that 50 to 250k band, some below, some above. But if you're a business with 150, 200,000 pounds worth of profit, which you then take dividends, etc., you can expect your corporation tax rate to probably increase to about on balance about probably 23%. So that's almost, that's a significant, it's a 30% increase maybe on tax rates that you paid previously. So if you're used to paying 30, 35k, you're now going to be maybe paying a £40,000 tax bill, April 23. So there's lots of incentives to encourage investment in the business and to keep employees on and to grow the business for the next 2 years. But there's a sting in the tail coming for those of you who are limited companies. People might say, is it still worth me being limited? If you're a limited company, if you were a sole trader and you were earning the level of profits that are being caught by this increased corporation tax rate, then you'd still be worse off as a sole trader individual. So it's not worth becoming a sole trader just because of these changes. And if you're a limited company and your profits are under 50,000, you remain unaffected. So I don't think it means that anybody should. It's not going to change anything for anybody. It just means we need to be prepared for those increased tax bills, which they're not actually going to hit. It's for the period April 23 to March 24, let's say, which is going to catch you at the back end of 24. So the actual cash flow impact won't be until the end of 2024 into 2025 almost. But just be aware that it's coming. A couple of minor points that we've got. There's we noticed a lot of clients getting these kind of demands for national insurance, class 2 national insurance. Seems to be some kind of issue at HMRC's end where they don't register people with self-employed income for class 2 national insurance. Something's happened with their systems. So if we sent you a demand and you get if we sent you your tax return with a summary of how much tax to pay and you get a summary back from HMRC that is short by 140 quid or whatever it is, then that's a sign that that's been done, and you need to contact the class. Get in touch with us. We can sort it. Although there'd be a charge because we can't do it for everybody. Or you can actually just contact the National Insurance Department and explain what's happened. But yeah, speak to us if that's the case. Also, anybody who is VAT and CIS registered in the construction industry, hopefully be aware, because we have sent out some mail shots to the clients we thought were affected. There's been a change to. It's called a reverse charge of VAT when it's, as I say, business to business, VAT registered to VAT registered construction industry. So if you're in that and you're not aware of those VAT changes, then please get in touch with your normal kind of point of contact in the office. I would normally send an email or a video out, but with obviously everything that's going on, it's a bit too much of a distraction for everybody. So that's my update for now. Hopefully, what I suggested everybody read the kind of attachment that comes with this email. I hope everybody's well and staying safe as always. And hopefully I will see all of you in a pub soon. Cheers. Thanks. Bye.